Hey guys, so today we're going to be talking about my second buy-to-let property and what I will be doing differently. So if you watched my first video, you'll know that I broke down the real numbers on my very first buy-to-let property. And to be honest, the cash flow wasn't great. And I am currently making about £120 per calendar month from this property, which is fine, but it's not exactly life-changing money. So when it came to buying my second property, I knew I had to do things differently. So in this video, I'm going to show you the property that I'm buying, how much I am paying for it, why I chose this specific property, what I am doing differently this time, and how this one should perform compared to my last deal. And if you are new to property, I'll explain everything really simply. Just a quick disclaimer before we get into it. This isn't financial advice. I'm just sharing my own journey and what I am doing with my own money. Everybody's situation is different, so always do your own research. So I'm going to talk to you about the property that I am buying. So this will be my second buy-to-let property. It's a 2-bedroom mid-terrace house in Leigh, and I actually found this one just before Christmas. It was listed at £100,000, and there did end up being a little bit of a bidding war for this property. So I put in an offer of £105,000, and luckily it got accepted. Now compare this to my very first property. This one is smaller, it's in a different area, and it does need a bit more work doing to it. But that is exactly the point. This time I wasn't looking for something nice. I was looking for a property that works well as an investment. So why did I choose this specific property? Well, there were a few reasons. First, the price point. At between £100,000 and £105,000, it's a much lower entry point than my previous property, which cost me £160,000. Second, the rental potential. I'm expecting this to rent at £900 per calendar month. So now straight away, that's a completely different deal compared to the very first property that I bought, because the ratio is between purchase price versus rent. And for this property, it is much stronger. And that is something that I completely ignored the very first time I bought a property. So I'll do a quick breakdown and we'll keep it really simple. So the purchase price is £105,000 and the expected rent is £900 per calendar month. So that's £10,800 a year in rent. Now obviously that's not all profit. I've still got the mortgage, the maintenance, the insurance and management fees. But the key difference is the rent is much higher compared to the purchase price, which means this deal has a much better yield than my first property. And yield wasn't something I really looked into on my first property deal. So I'll just quickly recap what I did wrong with my first property. The first property I bought, it cost me £160,000 and it currently rents on the market today for £960 per calendar month, which sounds okay. But when you break it down, the numbers are really tight. And that's why I only make about £120 per month in profit. The mistake I made was I bought based on where I liked instead of what performs good financially. And now this time now, with this property in Leigh, I have flipped that completely. So what am I doing differently? And this is the most important part of this video. I'm going to focus on the numbers first. This time I'm not asking, would I personally live here? I'm asking, does this make sense as an investment? Now that is a massive shift in mindset. And I'm also targeting a better rental yield. Instead of a nicer area, a bigger house and a higher purchase price, I've gone for a lower purchase price plus strong rent. And this should give me better monthly cash flow. And I'm also thinking long term from the start. With my first property, I was just thinking, let's just buy one. But now I'm thinking, how do I get 5 properties? How do I get 10 properties? How do I get 20 properties? So every deal now has to fit into that bigger plan. And this is a big one, because this property is being bought through my limited company, which is completely different to the first property I bought. as that was in my personal name. Now, I won't go deep into tax in this video, but the simple reason is it gives me more flexibility as I scale in the future, especially when it comes to tax efficiency, reinvesting profits, and building a portfolio properly. So let's talk about the plan for this property. It does need a bit of work, I admit, but there's nothing major. Definitely some improvements. Things like new carpets, new kitchen, new bathroom, and just general decoration. So my goal is simple: increase the rental value, make it more appealing to tenants, and improve the overall return. Now, I do want to be real with you. There is always risk when buying property, such as tenants not paying, repairs costing more than first expected, void periods, and interest rates going up. And with a cheaper property, sometimes you can get more management and more tenant turnover. So it's not just cheap equals better. It still needs to make sense. So I've been property investing for 4 years now, and I'm finally ready to buy my second property. So what have I learned so far? The biggest difference between my first deal and this second deal is experience. The first one I went in blind, but this one I understand the numbers much better. I understand the risk better, and I know exactly what to look for, and that changes everything. But we'll talk about the bigger picture. This property isn't just about one property deal. It's about building a system. The plan is buy, improve, rent, refinance, and then reuse the money and repeat. And that is how I want to grow my portfolio. So this is my second buy-to-let property, and this is what I am doing differently this time round. To summarize it simply, my first deal I bought with emotion. I focused on what I personally thought was nice. But this second deal, I'm basing it purely on numbers, and I'm very focused on performance. So if you're getting into property yourself, just make sure you understand what actually makes a good deal, because that will save you years. And if you want to follow my journey as I build my portfolio, please make sure to subscribe, as I'll be sharing everything: the good, the bad, and the real numbers.